Hi, this is Kribakaran Rajendran, founder of Algo Trading from Square of Dota. So I wanted to share one important information. Wait, it's kind of an incident which happened recently, and I thought that would be really helpful if I share that incident with most of the traders. So if you're a trader who just started trading recently for the last couple of years, and you wanted to become a full-time trader, who wanted to quit this job and become a full-time trader, then this video would definitely help you out. So do check it out. So I have this friend who worked with me in my earlier organization. I happened to meet him last week, and he also started trading recently. And no, this guy was not into markets for a long time. He just started recently, mainly because during the last year, during the COVID times when most of the organization asked to work from home, he found more time, so he started trading. He started researching more about trading, and he really learned more stuff. He did not just know a random guy or no did any random trades. He really learned something. He said that no, he started trading, learning more from Zero Varsity. He gone through multiple videos from YouTube, and he did started his trading with his own real money. And he said he was very excited when I met him last week, and he said he almost made 85% returns in the last 6 to 7 months alone. And I was really impressed with him, and he said no, he was able to achieve that 85% returns in the last 7 months only by spending few minutes or no few hours a week, where he mainly traded with stocks. He was trying to get in and get out with multiple stock positions, and he is completely satisfied, and he looks very confident now. And when I asked him further what about his plans or future plans, he said he's planning to quit his job and trying to focus on full time because he couldn't manage his office meetings and as well as trading. So he's planning to quit his job and trying to become a full time trader. I wished him luck and I moved on. Then later, when I tried to think about the same aspect, I could realize that most of the DMs or most of the messages I got recently was always relevant to the same incident that I that happened last week. So most of the people started trading recently, and they did make good returns, and eventually they wanted to see, okay, if this can be made as a full-time career, wanted to quit their job and become a full-time trader. So one thing that if you are in the same position, one thing that you should ask yourself is whether these returns or profits that you made came because of luck or because of your skill. So you need to find that. Why I'm trying to emphasize this is, say, in last 1.5 years, the new total accounts, demat accounts opened in India is almost 3 crores. But before COVID, the overall demat account holders in India for the last 25 years is only 4 crores. So in total 7 crores, 3 crores of new account was opened in just last 1.5 years. So more and more people are getting into markets, and if you could see in the last 1.5 years, obviously we are in a mad bull run. Whatever stocks that you pick up, most of the stocks are moving up rapidly and making multiple returns. And this will definitely put this question whether all this money that I have made in the last 1 year is from luck or from skill. So how do we know whether it came from your luck or from skill? So in order to find that, you need to follow certain process, and then you dig out whether you can do all this analysis and see, because if you're making 85% returns in the last 1.5 6 months or 7 months, you could have followed certain process knowingly or unknowingly. So you would have did some multiple screenings, and you would have shortlisted multiple stocks, but definitely you would have not traded randomly. So definitely there should have been process, but you do not know that that is a mechanical trading system. You followed certain process and it gave you good returns. Now your job is to go and test this process with the large historical data sets and find out whether it has made money in the past in different markets, because this market is not going to sustain. At one point of time, obviously the bull market is going to go end, and god knows if in case the 2008 kind of market comes back again, obviously we'll get into a bear market. So a guy who started trading recently, who never seen such kind of a bear market like 2008, it could be really brutal if he trades live with the same kind of mentality, with the same kind of systems that he has been trading in the last 6 to 7 months alone. So that is why it is essential to go and test your hypothesis, test your logic in the historical data sets. Specifically, take out periods like 2008, 2016, or even 2020, during the corona crash, and find out how your process or how your rules behave during those time frames, and see if it really makes money, or it is losing a significant amount of money. So this will give you a clear cut idea whether all this money that you've made in the recent past came from your skill, or it's because of the bull market luck that you made this kind of returns. So this gives you insights about getting into mechanical trading system. So a guy, whether it is a discretionary trader or a system trader, everyone follows a certain process, and that process, if tested with historical data sets, is going to give you a clear insight whether that is going to help you make higher returns in the future or not. So for an example, you take this. Most beginners or most people who get started with trading recently, they think, okay, having a high winning accuracy is really important, because nobody hates losing. So most of them wanted to be right most of the time. So they believe that, okay, a kind of a process or a rules which tells me that I'm right 80% of the time, they give more preference to that kind of a system. A system which tells you that you are wrong, no, 3 out of 10 times, and I mean 7 out of 10 times, and only you are right 3 out of 10 times. These kind of least winning accuracy, people tend to neglect it. They want to be right most of the time because that makes them feel good. But what really matters is, not at all winning ratio is the least bothered one. Whether you're right or wrong doesn't matter, but how much you make when you're right and how much you lose when you're wrong is all that matters. So forget about winning accuracy, and this winning accuracy could differ based on the kind of rules that you follow. A guy who is following a trend following system is not going to have more than 40% winning accuracy. And a guy who is following a mean reversion system can have more than 60 or 70% winning accuracy, but once in a while is going to lose significant amount of money, because when one trade goes wrong, obviously he'll lose more than what he was making in one or two trades. So that is how mean reversion will obviously work. So you need to find out what suits you, what suits your mentality. So if there is continuous losing streaks or six continuous losing streaks, will you be in a position to take that seventh or eighth trade after seeing significant losses? So you have to ask yourself and see what suits you. So if that doesn't suit you, then mean reversion is a style of trading which would suit you. So you would need to find a system which gives you little profits over a period of time, and even if you're wrong, it should give you little losses, not a significant losses. So find out your personality first and see what suits you, and then adapt to that trading system, or no, just follow that trading system with a single lot. You don't need to deploy all your capital in the initial phase itself. You can just start with single lot. You may have 10 lakhs or 20 lakhs of your capital, but still trade with just 1 lakh or 2 lakh for the first 1 or 2 years, and follow the same process what you have followed for the last 6 to 7 months, and apply the same process for the next 1 year. Don't increase your capital at all, and see whether if you are able to stick to that process. Whether you are able to make money or not is secondary. You need to find out whether you are able to stick to that process, because the guy who's sticking to the process will eventually able to stick to the process with a higher capital. So find out whether that process suits you, that trading style suits you, and adapt to that particular system for 1 year. After 1 year, if you look back and see how many number of times you override the system, how many number of times you exactly followed the rules, that will give you a clear conviction to deploy higher capital. So if you're a guy who is like that, who just recently started in the last 1.5 years and wanted to get into full-time trading, first thing and foremost thing you need to do is find out how your rules has performed in the past, specifically in the bear market, and see if it sustains those bear market, if it's really making money or not. Only once you backtest and then you see the historical results, and that gives you conviction to go ahead. Just because of your live results for the last 6 to 7 months, if you specifically rely on that and go into live markets or become a full-time trader by quitting your job, that is going to be really hard for you. So that is what I wanted to convey. Thanks.